Rob Russell, president of Russell & Company, joins us right now from Dayton, Ohio. Rob, talk to us a little bit about what you thought, or what you're thinking of the market action here over the last couple of weeks. We had 6 days or 7 days to the downside, then 6 days to the upside, a mixed bag yesterday, and it looks like today we're heading in the wrong direction.
Yeah, unfortunately we are, Chris, and thanks for having me on today. We've seen that kind of volatility the last few weeks, like you said. I think the market is really starving for some good information. I think the market, if it was a human being, it would be a glass half full type of human being. Unfortunately, though, the data that we're seeing doesn't support some kind of a strong economy. You know, we saw the home buyer tax credit expire. You know, we've spent most of the TARP money, and it's kind of like kicking the bird out of the nest to see if it can fly. And I think the economy is lacking some wings here.
All right, now let me ask you, with that said, we're starving for some positive information. I look at Intel, I look at even Alcoa, for the love of Pete, and certainly J.P. Morgan this morning. That's all good information. Are we kind of expecting too much, maybe, or expecting more than we were before with earnings, so it has to be really good to impress us?
I think it does. I think we need that real positive numbers and growth and earnings reports. Yeah, it was great getting it from Alcoa and even J.P. Morgan, but look at J.P. Morgan's stock today. You know, their profit increased 76%. But unfortunately, the street, as you said, right on the head, you said we're looking for reasons to sell, and I think it could be even possibly oversold right now.
Okay, so what happens going forward for the rest of earnings season now? Are we going to continue to have, as Chris said, these high expectations and then be disappointed when we don't get them? Does that send the market tailing back down?
Yeah, it very well could be. You know, this whole year has been nothing but a tennis match between the Dow 10,000. Have you noticed that?
Yeah. It has.
And we're going to continue. We're going to continue to see that. You know, back and forth. Now, you know, we work with people exclusively, high net worth people that are 50 plus. So those folks, our main objective is to help them sleep well at night. So we're looking at, besides equities, we're looking at different strategies to help protect their life savings, because they're either real close to retirement or getting into retirement.
You know, Matt, I'm glad you brought that up. Yeah, Rob, I'm sorry. I'm glad you brought that up, Rob, because we actually had an email this morning on another one of our shows, Varney & Company, that Tracy and I are part of, and it was an elderly gentleman who said, look, people who are close to retirement are really hurting right now because you can't make any money putting money into CDs or money market accounts, these conservative vehicles. What are we supposed to do? And our answer was, well, you got to change your investment strategy. But what do you tell people to change? Because you can't take on that much more risk at that age in this environment.
Right.
And you're right, because, you know, your CDs and money market are paying next to squat, and then you have the volatility of the market, so people are kind of caught in between. What we advocate to our clients is to build their portfolio very much like a house. I call it the fiscal house. And you got to start with a strong foundation, and that's where you get your safe, your principal guaranteed accounts, okay? With the roof of the plan, though, that's where you put your equities, you know, your futures, commodities. That's where you get your growth. That's where the risk comes along. And then in the walls of the plan, that's where you use your alternative investments. These are vehicles that are not correlated to the stock market. And having a blend between the foundation and the walls and the roof serves our clients very well. They did very well in 2008. And I think having that right type of allocation, what I call true diversification, that's what will serve those folks well.
Hey,
Meeting
Rob,
with the right financial planner, too.
Rob, quickly, what sectors then are you in right now? What sectors are you recommending for your clients?
Okay, well, you know, if you were to cut me, I would bleed red, white, and blue, so don't get me wrong with what I'm about to say. I really see opportunities outside the United States because the reason we're seeing this volatility is simply uncertainty. I've heard it on your program before many times. So in terms of sectors in the U.S., I like healthcare because of the demographics. The largest part of our population is the boomers. They need healthcare more than anybody. I like the consumer staples as well. But I think there's opportunities outside the United States. A lot of people don't talk about Indonesia too much. You know, China's middle class has just exploded. Well, who serves the middle class in China? It's the Indonesians. So there's another way to kind of play China, but in a different growth story.
Yeah, that's actually, we were talking yesterday about how Australia as well is an indirect China play.
Yeah.
Rob, thanks so much for being with us and sharing your thoughts.
My pleasure.
Rob Russell, president of Russell & Company out in Dayton.